So let's get started with the makeup of the new option. Growth lower carbon is split 80-20 between growth assets and income assets, specifically global shares and global bonds. It's using two of Russell's funds, the Sustainable Global Shares Fund ex Fossil Fuels and the Global Bond Fund. So UniSaver already invests some of its money in the Sustainable Global Shares Fund. What's the difference between that fund and this additional fund that'll be coming on board?
Sure, thanks Michael. When we're looking at it, so like you say, there's already an investment in the Sustainable Global Shares Fund that's looking to take, in its decarbonisation strategy, it has a 50% reduction in fossil fuel reserves relative to benchmark. It's also got reduction in carbon intensity. When we're looking at the ex-fossil fuel option, that just takes it up a little bit further. So that's seeking to have 0% exposure to fossil fuel reserves, companies with those, and also to exclude companies involved in, have a large degree of revenue from fossil fuel activities. So that might be like oil and gas exploration.
Sure. And what about the Global Bond Fund? Is that fossil fuel free?
No, I wouldn't consider it fossil fuel free. It does have its own green targets. So the Global Bond Fund does seek to have a carbon intensity about 80% relative to benchmark. So it is greener than benchmark, but I wouldn't consider it fossil fuel free.
Okay, so if it's not fossil fuel free, why go 80-20 and not just invest 100% in the shares fund?
Well, we're thinking of this as being a growth fund rather than an aggressive fund. So a typical growth fund has about 80% growth assets and 20% defensive assets. So we're trying to make this sort of comparable in that risk profile with the existing growth option.
Sure. And so is there a plan down the track perhaps to introduce a balanced and a conservative version of the lower carbon option?
Well, obviously rolling out these options costs money and time, and so we've decided to start with the growth option. We felt that would appeal a lot to some of our younger investors, and it's also possible, as we'll talk about later probably, to ratchet down the risk if you want to try and achieve a lower level of risk, whereas it's difficult to ratchet up risk. So that's why we decided to start with growth.
Sure.
Possibly further down the road, if we have good take-up on this, it would be feasible for us to roll out a balanced option and or a conservative option.
Okay. So just continuing with exclusions, a number of members have asked whether the new fund is entirely focused on reducing carbon exposure or whether it has a broader set of exclusions. I think for this we've got a slide to help explain the differences.
So UniSaver, all of UniSaver's products exclude investments that would run materially contrary to New Zealand government policy. So all of our products would exclude tobacco, anti-personnel mines, cluster munitions and nuclear weapons.
Okay. And as well, and perhaps to explain to members that global shares are the biggest asset class for the fund. Around 40% of the fund is invested in global shares, and already half of those are invested in the Sustainable Global Shares Fund. What are the additional exclusions, David, that included in that fund?
Yeah, so like you mentioned, there's some additional exclusions for the Sustainable Fund. So it's mainly looking at things like excluding companies with exposure to uranium mining, might be also controversial weapons, coal power generation in terms of thermal coal, also companies breaching the UN Global Compact.
Okay.
And then, of course, the new fund, the fossil fuel-free one, also excludes fossil fuel reserves.
Correct.
And oil and gas exploration.
Right.